Hello. So today we have our podcast, the second
Hello.
one of the season, right?
Yes, indeed.
So last week we spoke about the perils of property in regards to inheritance
Yeah.
tax. So this week we are speaking about business.
Relief. Yeah.
Yes, thank you
Yeah.
for reminding me.
No dramas.
Went over my head for a second. Yes, we're speaking about business relief. In regards to business owners
Yeah.
and the considerations for inheritance tax.
Uh-huh.
So, to start off with, why did we pick to discuss this topic today, Richard?
Well, as we've been in the series, we're looking at inheritance tax, and there's kind of 5 areas that really make a big impact. Property we talked about once already. Businesses and ownership of a business can make a massive dent in terms of wealth and how much an estate can be worth based on share ownership, and just business ownership in general. So hence why we want to cover that topic off today
Thank
in this
you.
evening's recording. Yeah, this evening's live session. Sorry,
Podcast, the Sonia and Richard
podcast.
show.
Yes,
Come on,
okay.
Richard.
Look at that. Wake up, wake up, wake up, wake up.
So, first question: what is
Yeah.
business relief?
So that's a great question. So business relief is actually a tax relief that can be claimed. Not going to get too techie, but ultimately, you can claim up to 100% relief for ownership of a business, a trading business, for inheritance tax purposes. And so it's a very, very powerful relief that can be utilized.
Okay.
Indeed, yeah.
Okay, so who's eligible for it then?
Um, any business owner, sole trader, partnership business, LLP, limited company, any business owner can claim it. We can go into a bit more detail later on in terms of who can't. When I say any business owner, so if you run like a investment business, so limited company, or personal ownership for buy to let, landlord type scenario businesses, anything to do with land, outside of development, then pretty much you're not eligible for business relief. So it's only for, shall we call it, traditional businesses. That includes online businesses, etc., but just not land-based businesses per se.
Okay, so
Yeah.
could you give me a scenario where somebody would claim business relief?
So normally when we're drafting wills and we're speaking to business owners, that's one of the main questions we'll ask. So how do you want to distribute this wealth to your loved ones? And we're all about generational wealth. So utilizing trust within wills are very powerful. Um, when we look at the estate and if they have an idea of what their business is worth or their share ownership is worth, um, and one thing I forgot to say, as long as the business is a private limited company, not it can't be on us trading on the stock market. It's not eligible if it's trading on the stock market. So publicly quoted businesses are not eligible as well. So I forgot to mention that. But yeah, so if they are owning a business themselves, or share of another business, etc., that does form part of their estate, and it can be a large chunk of money, which could be tip them into the either tip them into the scale of paying inheritance tax. Um, it's brought them over their allowances, and if we're looking at the allowance for the residents in the rate band and they're in there over the £2 million mark, over 2.35 million, then now the allowances are reduced, and normally because the business ownership has kind of tipped the scales for that purpose. So understanding how business relief can be utilized is actually very, very powerful, and it can get rid of 100% value of the business up to that amount, and reduce the estate individually for business owners. So it's very powerful. And there's other aspects as well, when you use trusts alongside the relief, but that's the main one, which is really powerful. Very, very good.
Okay,
Yeah.
thank you. So, why should it be in the will?
Well, it doesn't have to be in the will. It can be during lifetime. Everyone's situation is going to be unique and different. But when we're planning estate planning for clients, it's definitely has to be talked about. And 9 times out of 10, a will is the best way for wealth to be distributed, unless there's a particular reason why you want it done during a lifetime. At which point, then we can cater for that. So it can be claimed either during lifetime or during a will. But most times the conversation is done so that it's a planning is via the will, having a trust in there. And it's important when we're planning with clients because we want to separate their personal assets from their business assets
Mhm.
for tax purposes. People might say, "Oh, well, it's business relief. What's the big deal?" There's something called interaction um, under the Inheritance Tax Act, which can be a pain. And so, just keeping it really simple, putting it in a trust, unlimited value trust, because the relief can be claimed against it for business relief. That is. Makes so much difference, and it's also good for asset protection purposes. Also good for generational wealth purposes, um, because the wealth can be distributed specifically, managed by trustees, so it's not squandered. Whereas if you're giving it out directly, things can go wrong. We don't want it to happen. You don't want generational inheritance tax challenges,
Mhm.
etc., etc. So yeah, it's utilizing the trust within the will is very powerful to claim business relief.
Okay, thank you. So, is there a limit to how much business relief that can be claimed?
No, at the moment,
Mm.
it's unlimited.
Okay.
Let's pray it stays that way. But at the moment, it's unlimited.
Okay,
Yeah,
thank you. So, I think you already touched on this a bit earlier,
yeah,
but what type of businesses can claim the business relief?
yeah. So the question's important.
Hmm.
So if you're a sole trader, as I said, because sole traders can have multiple employees, the business can be worth a lot. Or if there's a partnership because they want to keep things private and don't want to have anything public on company's house, or a limited company, and there's got shares already has value. It's going to be personal in their estate. Um, but the main businesses, as I said, are those that are deemed as trading. Okay, not those that are deemed as investment based businesses. And landlords are going to have a really hard time, whether they're based in a limited company, doesn't matter. Personal name doesn't matter. Partnership doesn't matter. It's land based, investment based. There's a few caveats. I'm not going to go into too much of it here, but the main caveat is for developers that you're deemed still as a trader. As of my understanding at the moment, that may change at any time. But ultimately, land-based businesses, you're going to have problems. You can't claim the relief. So inheritance tax is going to be a bane in your posterior. You need to do something about it because business relief cannot be utilized to offset that. And so you're going to find other ways to do that if inheritance tax or the payment of inheritance tax is something that bothers you.
So, is business relief a thing that is utilized by many business owners?
I don't know. All I know that a lot of our clients are not aware of it, and so that's why we have to really, why we're talking about it today.
Yeah.
Um, any competent tax advisor would know about it. Uh, Specialist tax advisor from a compliance side of things,
Hmm.
or a competent advisor, private wealth advisor, etc., should know about it to advise business owners because it's very important for families, especially family-based businesses, to be aware of this. Really, really important. Especially when I talk about family-based businesses, passing down the wealth generationally is important.
Yeah.
Um, and if it's in your name, some way, shape, or form, it's going to get taxed or taken if a problem takes place, like divorce or some kind of creditor attack, bankruptcy, etc., etc. So, hence, being sophisticated with it or savvy with it, um, utilizing trusts, etc., to help protect family and loved ones and save money from inheritance tax purposes. Yeah, definitely important. And let's not um, miss out on farmers.
Mm.
Um, there is something called agricultural relief, which is a separate type of relief. Again, up to 100% of the agricultural value of land can be claimed to offset for inheritance tax because land would be in someone's personal name mainly. And farmers, if they own it outright or themselves and it's not rented out, and they farm on the land and have businesses on the farmland themselves can also claim business relief as well as the agricultural relief. So it's a very, very, very crucial relief. It's going to save a lot of money for families, absolutely loads. So it's a big deal. It is really a big deal. Both
Oh,
of them, yeah.
well, thank you.
Mhm.
Have you got any more to add?
I think the
Or
main thing is, we want to educate as many people as possible to take action.
Mhm.
So if you are a business owner and you haven't really considered this, or you've done planning and it's never been discussed before, it's definitely worth considering. Especially, some people say it was not to worry about it because it's automatically applied. Yes, but it could be wasted if it's not done properly.
Mhm.
So it's better to do something about it and have peace of mind than not to do something about it, and then it can cause problems down the
Yeah.
line later on.
Yeah.
And if there's family disputes, it can cause problems. So again, having it in a trust will be very powerful. Uh, and also, the type of ownership could affect the amount of allowance that can be claimed. So it could be 50% allowance claim rather than 100%. You need to know the difference and why, and maybe you could make changes in your lifetime to affect that as well. So as a business owner, really important to consider this and have a conversation with us or someone who you trust
Mhm.
to give you more advice around that in more detail. It is really imperative
Important. Yeah.
to have that discussion because it
Mhm.
can make a big impact and dent in the old inheritance tax final calculator of what can be paid out. So having that peace of mind is important. Most
Yeah.
people with businesses, again, the exit plans are not discussed. So they're not thinking about, you might be going into business thinking you can do something and it could cause a massive, again, property
Mhm.
developers, maybe separate your businesses out if you're going to go into development, buy, refurb and sell
Mhm.
some, and then you might do some buy, refurb and hold and rent out. They might have a commercial outlet, HMO. There might be three separate business models right there to look into from a inheritance tax perspective. So hence why I'm saying, let's be mindful of what's going on, get the right advice, and then if necessary, take action. Really, really, really big deal
Yeah. So
from
if you're a
that.
business owner, please, please, please do take this into consideration. It's very
Yes,
important.
indeed.
Yes. But I believe that's it
Yeah, it's
for
a wrap.
this episode.
Fantastic.
And please let us know if you're enjoying this. Honestly, we
Yeah.
do really appreciate your feedback. We
Yes.
have got some lovely feedback already. And yeah, so just let us know
Yeah.
that you're
Post in a
happy with the
comment
podcast.
if you're watching it on, our channels, YouTube,
Yeah.
Facebook. Let us know. Give us a follow or thumbs up. Would be really,
Yeah.
really appreciated as well. So thank
Thank
you.
you. Thank you. Bye.
Cheers.